Hello, hello. Hello, everyone. This is Adam Bottom himself, the man who has been contributing to AshrafLaidi.com for what? Remind me, we're getting too old.
Well, this is 9 years. We've been 9 years. That's a good marriage in many places.
Yeah, no, we always appreciate your stuff. And tell us what you do on the side. Well, on the main, actually.
On the side, right on the side of me here, on the main. Yeah. Managing editor at Forex Live and chief analyst there. So thanks, Ashraf. We do live analysis of markets in real time, 24/5. So we're just fighting a battle every day with the data and figuring it all out.
Yeah, before I tell the listeners and the viewers what we're doing, we're actually doing this on Thanksgiving evening. I am in London, Adam in Canada, so we're not exactly observers of this holiday. You had your own Thanksgiving. The UK is trying to be retailized into the Thanksgiving fever, and it is working for the last 10 years. So is Halloween. But before I tell what the public what we are going to speak about, just want to say that Adam, by the way, you know, whenever there is a central bank meeting, such as especially the Bank of Canada, he is a native Canadian. He nails the calls on the dot. And most recently, when you said to the readers that they are going to go for the full taper, they're going to go to the full taper, right?
Yeah, they did. And, you know, that it was, there were some signs there. And again, you know, we might talk about the consensus on 2022 this year, but a lot of times you get this strong consensus of economists and they're loath to let it go, even as the data and the events are changing. And that's the value in following it in real time.
Yeah. Ironically, so the Canadian dollar was what? The weakest currency in 2020. It was the weakest, and to this year so far, year to date, it is the strongest currency in the G10 complex, and that means it is the only currency that is actually up against the dollar, US dollar. Maybe that has changed in the last few days.
It's right there. It's hanging with the US dollar, and even on Wednesday when US dollar was strong again, the Canadian dollar, it bucked it a little bit. So. You know, oil, strong commodity currencies, once again, are a pretty good place to be. And Canada certainly on that list. And that taper goes into it as well, and whether the Bank of Canada can hike. Now, mind you, we saw the RBNZ hike this week, and the market reaction wasn't exactly cheering that on.
What happened? What is happening? So I'm not going to ask the question, what is going on? These guys, they raise rates, the Norwegian, I'm not going to talk about the Turks when they did it once. You know, all of these guys, they raise rates and their currency falls. But let's talk about the RBNZ. I mean, is it because some unrealistic analysts were expecting 50?
Yeah, 50 would have been such a panic move. That talk was out there and it was strong. And I don't know if this was a sell the fact trade. You know, that's sort of the way the market's been going anyway. The Kiwi's been struggling, so it piled on a little bit there. But I mean, they are going to
remain closed. They are going to keep their borders closed up until what, April or something?
Yeah, they're sort of easing off of that. And yeah, maybe that's into it. The COVID trade, they're vaccinating pretty quickly, and that looks like it's going to be a win. But you know, and I know betting against the central bank that's hiking rates it's a tough bet.
Yeah. Listen, we're going to talk about definitely the elephant and the monkey and everything in the room, which is the dollar strength. Is it going to continue just at the end of the year, or is it going to continue into next year?
Well, let's make it a conversation. I mean, where are you at on the dollar? I mean, you looked at the charts. I'd love to look at some, and you know, think about. It's been a nice trade, and I mean, America has shown a lot of resilience to COVID. There's talk now about another COVID variant in South Africa, and you know, the one place you can say won't shut down again, so maybe along with Brazil, is the United States. And so there's, you know, obviously they've handled it in some ways poorly, but economically that resilience has been powerful. And I think we see the fruits of that in the dollar. But I mean, it's a strong consensus trade, I think, at the moment and into 2022, that the dollar will continue to strengthen. And, you always get a little bit wary when that consensus gets to that level. I mean, and I'm not sure that the consensus is all the way there yet. So it's not obscenely, on one side of the boat, but what do you see when you look at the Dixie chart?
I agree. I agree. The reason that it escaped and arose so much is that because the consensus was not there. I think Goldman Sachs got it a lot wrong. I got it very wrong with the dollar index. But I actually kept away from trading, especially the euro call, and we know 57% of it. Look, let's... my general view, and I wrote about this in YouTube. Here's the thing. I'm comparing this to the last time the Federal Reserve did a taper, and I know it's not good to compare things, in different times, but it was December 2013. So in 2013, we had the taper tantrum. They finally said to the world in December 2013 that they were going to taper. And they started in January 2014. And we all know that the April of 2013, we had a gold crash. There was disinflation. The dollar was going up. And Draghi was getting ready to serve to you a contrasting monetary policy, close your eyes, buy the dollar, sell everything else, right? So do you remember in 2012, when he said the famous speech, we will do all we
whatever it takes,
whatever it takes. And that whatever it takes finally took place in 2013. They did asset purchases, and then 2014, I believe, or 2015, were the rate cuts. So the Fed Yellen was tapering in 2014. And then in the end of 2015, she raised rates. She raised rates while Draghi was cutting. And that was a perfect contrasting play. Today, it is not. So, but there is an equivalent of a dovishness or a weakness of that in the euro. The equivalent of that is obviously you've got the situation with the COVID. It's very bad. We've got lockdown in Holland. We've got lockdown in Austria. Merkel wanted to lock down, but the government, or I guess the party, said, no, we're not locking down anything because we want our VAT receipts and we want our money before the holiday and we want people to spend. So on one end is that. The other end, which I need to speak about that with you, is the gas, natural gas, and how you made money. I'm going to ask you now how you made money in natural gas. I'm sure a lot of people made, but I want you to tell us your way of doing it.
It's interesting. I mean, it's funny because we'll talk a lot about things that'll happen and things that won't end up happening, and the world changes constantly. But it's important to kind of recap of how we come to conclusions and why we make trades, and you wait for all those things to come into line. And for me at this time last year, or even before that, natural gas, like a very long gas. It's been obviously a spectacular trade. And it starts out from oil, right? Oil crashing and oil drilling, a lot of it, especially in shale. A byproduct is really natural gas. So you get a mix of oil and gas. You're mainly drilling for the oil, and sometimes they just burn off the gas by flaring, but a lot of other times they take that as well. So a certain percentage of gas supply is simply a byproduct of oil. Or you could think of it that way. And when the pandemic hit, oil demand dropped dramatically, but natural gas demand didn't drop at all. So you have falling supply because natural gas is used for power. It's used for heating. And of course, power and heating didn't change at all in the pandemic. And so you had, again, falling supply and demand steady. And then you had a whole stop in drilling, and you have LNG, more and more, that's a secular trend towards more gas demand. Mm-hmm. And what happened was, gas just started to go up and up. And it's just been as simple as that, really, from starting with it. And then, winter becomes a factor. You can't say you predicted a cold weather in Europe that caused LNG to spike, and Asia as well. And the balances, so also a reminder, the balances in the energy market are very small. If we're talking about OPEC right now, 400,000 barrels, or the US releasing 30 million barrels or 32 million barrels over months, we're talking about $100 million barrel a day market. And all of that, just moves the needle a little bit. But even if you have 1 or 2% oversupply or undersupply in a market like gas or oil, it can run and run and run and run because people are buying it almost no matter what to get to the point.
When did you transition from an analyst call to that of let's put some money call?
Yeah, I mean, so that's always a tough thing as an analyst, right? Because you're sort of trading it, you're analyzing it, and you want it. It's always nice to have money behind a call. I mean, I was talking about negative. I was talking about negative oil. I mean, months before it happened, and so you're always. I think just sometimes if you're watching enough markets, and that's what internet market strategy is, what you're doing. If you're watching enough markets, it's sometimes you see something that you feel that others are missing. And then you have to have that conviction to be in a trade for a year. And that's always sort of the X factor of any good trade, right? Is that conviction. And it's tough to impart it. And you have to have a really strong basis for it. And once in a while it all comes together.
Did you buy the NatGas, the contract? Did you buy the companies? Which one?
Yeah, me it was the companies. I mean, and that added a lot to the conviction of the trade because these companies were trading at maybe 5 times cash flows at $2 gas or $2.50 or $3 gas. Mm-hmm. And as prices go up, the torque that they have was just unbelievable. And, some of them were debt
leverage.
Yeah. The leverage. And it's the same in a lot of commodities. I mean, that it gets to that debate though. And what do you think about this is the pure trade versus, adding complexity to it? Cause I've seen so many times where, you have a good idea and it might say it was gold or silver or whatever. And then you say, well, I'm going to sell the calls at this for call spread or, a miner, and then the miner, something goes wrong with the mine and you get cleaned out that's, what do you think of that?
Yeah, this is an issue this is why I'm not really a big fan of buying the miners, the gold miners. I look at the ARCA or I look at the gold to gold box index when it comes to gold, not to NatGas, because I don't want to have to deal with a strike in South Africa or some guys getting stuck somewhere. So you look at the bricks and everything. But I guess with your case, I think what you are still not telling us, you're really being very diplomatic, or you're training for a career in the intelligence services in Canada, because you're really withholding the information that you told me over dinner when you were in London, which is you basically went for the miners, and because you were attracted by the preferential shares and the sort of the converted bonds nature of it.
Exactly. There was distressed debt as well around these whole trades, and something like natural gas as well. It was getting sucked down with oil, and it just became one, oil and gas, right? It trades as one on the same indexes, and I think that's always going to be going forward an opportunity because everything's bunched up into ETFs now. And it was always in groups, but now it's all ETF trading. And if people are buying the ETF or selling the ETF, it puts pressure on the oil and gas producers identically, essentially.
Adam, you told me that you have to do something in the next minute.
Right. Well, it's interesting. We could talk about that. It's Japanese CPI, and you look at the whole world. It's just for Tokyo. And the numbers in Japan are still unbelievable. And we're talking about a dollar trade or not a dollar trade. But even on a lot of these days where the dollar's strong or the dollar's weak, the yen is weak in both of them. And, you have different current countries accelerating at different paces in terms of the inflation trade. And, Japanese, this is Tokyo CPI about to hit right now. And the year over year X energy number is expected at negative 0.3 year over year. So there is somehow still no inflation in Japan. And we could talk about whether the euro is a funder now or who is the funding currency, the Swiss franc as well. But the yen, it seems to me, the whole world is raising rates. And Japan, it's spinning its tires once again. And the numbers are out. Yeah, plus 3%, 0.3% on year over year inflation at a time when
anybody who's been in the market for a long time, I will let you do what you have to do and I will take the mic. Basically, for a lot of people here who have been either new or old or whatever in the markets, you will know that I think since the late 90s, Japan was always the call that people would get wrong. It would always be the call that because of their deficit, it would always be the call that people said, this is it. This is when we sell Japanese bonds, JGBs, and this is when yields are going to take off. But the deflationary impact was huge. And that's and part of the reason. And part of the reason this is that is so is why is it a safe? Why is it a risk? People are always asking. Actually, that is in my book in chapter. I don't know which chapter, but why is the yen the famous? Used to be the carry trade, and why is it the funder? Because they basically they made this choice, and I'm not telling you this as new information, Adam, but to the listeners, it's just basically. They have a debt, but they also have a current account surplus, but a huge budget deficit. And with that money, with that surplus, they recycle it and they put it away. They buy people's papers, they buy US, they buy foreign papers. This is the ultimate carry trade. And that's why when yields go down, basically there is nowhere else to go. So basically the yen goes up. So current yen crosses push lower when yields go down and vice versa. And yeah, and they started with quantitative easing, I believe is 1996, 97. And I don't know if you're finished to do what you're doing, but before when I said the G word, the gas word, and I said, oh, by the way, in parentheses, you will tell us how we made money. But the thing is that what I want to say is that even though Draghi is not, is not easing or Lagarde is not cutting rates, well, there is something else which is the equivalent of that, which is the gas, which is the natural gas, the heating situation in Germany and in Europe, which may have stabilized. Yeah. And if Putin loses it again, then he will bring them on their knees. And then the other side is the situation with the COVID cases. And again, for those of you who are in Europe or in the UK, whatever, there was a rise in the UK in COVID cases, but not hospitalization. In Germany, they're worried about hospitalization. So I think these two cases that will bring down the euro. So people are bored and sick, and listeners are sick and tired of us talking about what everybody else is talking, which is pointing to the obvious. And they want to know where on earth the euro is going to go. So I will change the chart to euro dollar while you tell me your 2 Canadian cents.
I don't know. Is it, it's so disappointing because some things start to look bright in Europe. And you still have a fractured monetary union. And if you, to belabor your point, coming out of the last crisis, Europe looked okay at first, and then they had their own Eurozone debt crisis, right? And it's going to be very tough to cut these budgets once again. And that whole headache is coming again. And the politics in Europe are growing increasingly volatile as well. And I don't think a lot of that is being talked about right now. I like to be optimistic about Europe and the Eurozone. And I think there is inflation there. So to contrast to the yen, we are seeing inflation in the Eurozone. So at a lot of times we started to, put the yen and the euro on the same level as funders. And I think there's more to be said now the Eurozone might start to hike, and COVID cases. I don't think it's that much of a trade. At the same time, is it too crazy to talk about parity in euro dollar? I want to be bullish. I don't have a strong conviction on this trade because I do think European consumers have money to spend, and that can be a tailwind. And there is some determination politically.
I remember the carry trade element came in 2014, 2015. So 2014, when he was cutting rates, and then when we had those issues, when we had the famous crash in August 2015, we saw the euro pushing higher. And actually, what was interesting is that when Greece came in, everybody was expecting parity with the Greece aspect. It was summer 2015, and nothing happened, and it didn't get parity. Let's let the chart speak.
Yeah, let's see.
And you can put your kids to sleep. And you can come back, and you can come back, and you will let people. I'm going to share the screen, and you can let people still wonder what the chart is going to do. And this is going to break people down into 2 camps. Yes, it's going to break. No, it's not going to break. Let's give them our 2 euros or 2 centimes. This chart, my friend.
Yeah.
This is euro dollar monthly. Now, for those of you who are new and saying, well, what on earth is the euro doing in 91? They took the Deutschmark and they extrapolated. The euro was invented in 98, autumn 98, but it started to trade in January 99. Now, look at this. So basically, let me just give an idea here, which is basically, it's I like these that speak for themselves. The thing is that, so this is when the Deutschmark was happening, 85, Plaza Accord. Here things were start interesting. So this is where basically 2002 was the dollar peak, and this is when Larry Lindsay came in and he said that basically we have to depreciate the dollar. Bush W was midway through the midterm elections. He needed to weaken. He had to win the midterm election, blah, blah, blah. Here we have 1, 2, 3, 3 lows. Here we have 3 lows, and here we have a low. But never mind, this is detail. I'm saying is that we finally broke this, Adam. I don't know if you can see this.
Yeah, I'm seeing it clearly. It looks a great chart.
So if we do break, there is really nothing left. There is no hay nada aquí. Il y a rien ici. Il reste plus rien. Ma fi wala ishi. Any other language I missed? Non c'è niente qui. Apart from we have to go towards 109. And the way that I'm looking at this destination, so there is a destination and there is the road. The way I'm looking at it is that everything is going to really blow up here very fast. It could happen like 200 pips, like in a you know, not a Christmas Eve, but it could happen. And then I think we're going to stabilize around 109. And here is the scenario that I'm thinking, Adam. And now we could whether they can carry on, the Fed can carry on doing a taper, whether they can taper all the way, whether they can speed it up, whether they will shoot themselves in the foot, whether it will be a case of 2018 when Yellen said, no, not Yellen, when Powell said, oh, we are doing a taper on autopilot, and boom. Sorry, not a taper, a quantitative tightening. Remember, they did quantitative tightening, and then they stopped it, and then everything blew up in that December 2018, and the Federal Reserve started to talk about Apple, and everything blew up, and then they stopped. So I don't know whether the same thing is going to happen here. Maybe it could not. Inflation maybe will absorb that. But I think all of that could really materialize. But just one last thing. This reminds me of 2016, Adam. 2016 was a very strong year for the dollar, especially Q4. Trump won.
Right.
The dollar soared. Yield soared in 2016, and last 3 months of 2016. And then the dollar peak was January 2017. The euro bottom was January 2017. Now I'm going to get to something where if there's a drum roll, hopefully we do it. And then 4 months later, there were the French elections, April. Everybody said, oh, wait, you had Brexit in summer 16. You had Trump winning in autumn 16. Marine Le Pen is going to win it. And I said, no, this time it's different. And she lost it. She didn't win it. He ended up Macron with Mélenchon, the communist. And it was, so April was a big rally for the euro dollar, 110. And then second round in May was a soaring euro dollar. Yes, this time it's different. But wait a minute. There is just one last thing. In January, we will know who will be the Republicans or who will be the leader, who will win the nomination of the right party. The best outcome for the market from an early on is if Michel Barnier wins the nomination of his party and he faces Macron. Both presidential, both are friendly for the market. If Barnier does not really get it, it will be very itchy. It will be very tough. If Eric Zemmour, the racist, okay, and I will say this, racist, I don't care about offending anybody's insensitivities. Did I say the racist Eric Zemmour? If he's going to come in, he is more of a polemicist or a polemic, he is into the polemics. Even Le Pen said that, he tries to create the polemics and everything. If he comes in, it will be a knee-jerk reaction, but it will also mean that Macron will win, and that could be helpful. But we are realistic, Adam. It's not all about France. We need Germany to do for the euro what they did in 2020, which is probably come in with a big fiscal key. Right?
It's interesting too, and we talk about French politics and the volatility of politics, and we take for granted that Merkel brought stability to German politics for however many years she was there. And before that, it was, you know, Germany was Italy. It was a mess for so long. And you know, maybe there's a tail risk that it becomes a very paralyzed state. But it's interesting, you know, you bring up a chart, and it reminds me of when you were in Montreal, and it was giving a presentation back in, I don't know how many, 7 or 8 years ago. And you had this chart on, and it was a very simple chart, even more simple than the one you just showed. And it was dollar yen, and it was dollar yen, and it was rising. And you just said, listen, it's going up. Here's the chart. And it did, you know, like it wasn't 10 layers of analysis about what was happening in Japanese politics or what was happening in the QE or the Fed. And it was just a wonderful chart. And there was this conviction about it. And it's a very vivid memory of mine with yours. It was impressive at the time. Everybody
and their sister and their mother and their uncle who just had, like, you know, not a hangover, but a big food over from Thanksgiving, and they can't see straight. I'm going to show them this chart because everybody and their sister and their mother, they know that the DXY is 57% influenced or weighted towards the euro, right?
Yeah.
So let's look at the dollar index from not the Bloomberg, even though I'm using their amazing platform. I'm going to use this. I'm going to use the Federal Reserve Trade Weighted Index, where the euro area is 20%. Okay.
So rather than 50, whatever percent you said was in the Dixie,
where China,
with it.
China is 13%. Mexico, that's emerging market play. It's not like, you know, the Swedish krona and the Swiss and the Canadian.
They're in there.
So that is the components. Now I'm going to show you the chart, and we're going to do something interesting here. So I'm going to show you guys that you guys have never seen ever in your life, unless you probably get some research from somebody in the moon. I'm not going to compare myself to the moon, but here is the chart. Don't stop.
There it is.
Okay, so
we got to move. All right, we might be in the way there. Are we in the way? Okay.
Are we in the way? Oops. Are we in the way? Okay, here. How about this?
All right.
Yeah, I don't know how to move those. So this is the weekly chart. So this is the DXY, okay? This is the DXY, the green and the red. And the blue is the Federal Reserve trade nominal, not real, nominal trade weighted index, okay? And is this right? And now I'm going to do normalization, and no, I'm not going to do, I'm going to give the actual price. So yeah, so here. So Adam, so the top of the candles is the DXY, the Dixie. The blue is the Federal Reserve. And the green is the Federal Reserve Index, okay, divided by the Dixie.
Right.
Okay, so basically it is crashing because the Dixie is soaring thanks to the euro weight, and it gives you an idea. Underneath here, the red is dollar yen, and the white is euro dollar. So this just to give you an idea about this situation here, that yes, the blue one, which is when you do not take into consideration the Dixie or the euro factor, the blue one is also rallying. But most importantly, it could have a lot of upside. Now,
yeah, that's exactly what I take away when I see that. That is,
it does, right? Yeah. Now, the thing is that, this is the Asian dollar index, which is a very good, interesting chart from Bloomberg. So when this goes down, the Asian currencies are going down against the US dollar. So what we had is that we broke this key triangle. Very important. Okay, and so this is, so as this goes down, this is the Asians are going up against the dollar. Now I'm going to go to the weekly. As you can see, 2020 was very bad for the dollar, so everything went up against the dollar and the Asians went up. Then we start sliding. It's not a crash like the Dixie, right? Like the components, but it is sliding. So this is something for us to look at. Now, does this chart suggest to you that it's going to crash like the DXY is going to soar? I don't know.
You know, it does bring up a good point, though, about, you know, the dollar in general and emerging markets and how much it fits into that. You're showing the weighting, the Mexican,
the yield story.
Yeah. And I don't think we, you know, what's happening in emerging markets. I mean, they're struggling right now, and that creates demand for dollars. You know, if we do see the commodity, if we have a good year next year, right? COVID's okay, things keep getting better. Fiscal stimulus in the West kind of lingers, and there's all kinds of spending because household balance sheets are great. Yeah. You know, the demand for commodities in commodity exporting emerging markets will reverse those flows from the dollar. I think there have been tremendous flows from emerging markets into the dollar. And the second thing, and I don't know how big of a factor that is. It's tough to quantify. And the second one is, I think US tech equity inflows are a real thing. I think, you know, there's this trading in the US market that has really, and you compare Europe to the US, and Europe's trying to defragment its equity markets because they want a taste of this. I mean, it's amazing to have a company, say you're AMC, in the US, and you could, you know, your stock goes insane. And then you do a secondary, you pay off all your debt, you save your business. And I think a lot of, you know, Europe looks at that, well, I mean, that's one in a million, but at the same time, it's happening in the US. And that capital, America is doing a great job of attracting that, whatever, if it's dumb money, anything. And even, you know, a lot of crypto money flows through US dollars. And so, you know, but maybe that can reverse as well. You know, Tesla can only go so high, you would think. I may have said that a year ago, though. But, you know, is that a secular trend, and can it reverse, and can it have some knock-on effects to the dollar? I think it can. It's a tough thing to talk about because it's outside of the fundamentals. But, you know, watch emerging markets, and I think that can tell you, you know, in a good year next year for the world, which I think is coming, I think, you know, there is a case for dollar weakness against some of these things. But then I just come back to that yen, and it just seems to me it's a much more straightforward trade. Dollar yen is breaking out. It's been a good trade. And you know, euro dollar, I don't know, but dollar yen in a world that's improving, in a world where rates are rising, in a world where Tokyo CPI out just now is up, you know, 0.5% year over year, 0.3 ex food and energy. You know, there's one country in the world it's just going to stay a funder, and we're seeing it now. Yeah, breaking above 115, a lot of highs around there, and you know, I think in a whether the Fed's tapering quickly or slowly, and that's going to be the ebb and flow, because the seasonals in December, while we're here at the end of November, are poor for the dollar. And it looks a little like, if you look at that, you think, wow, I missed it on the dollar index if I want to get in it. Or if you want to go against what I'm saying, I think now would be a good time to be short the dollar, to wait.
Or the chartist would tell you there's an inverted head and shoulder here, a giant one here, okay? So this is the left shoulder here, so around 102. This right shoulder is 100, 102. I mean, a lot of smart people have been wrong about the yen, waiting for the yen to blow up, right? A lot of people. And, and the same people have been saying that yields are going to finally go to 3% for the last 20 years, right? But if you take away all of these annotations, you know, then, you know, some people may say, well, what makes us believe that this spike here is not going to be the same as the spike here, which is June 2007? Well, because it was June 2007. It was when everything started to fall, even though the stock market was it topped at in October, I believe, 2000. No,
that last peak into October. Yeah, it was after. It was after things really started to get bad, and then it had one more last. And if you remember COVID too, COVID's raging in Asia, and then we still peaked at the end of February.
Yeah,
and it was scary how tough the stock market can be. It will keep going up until it has a clear, undeniable reason to break down. And I don't think that's 2% yields.
So before we go on to metals, because I've got a few views there, I think we definitely have to talk about the 10-year yield. which is very important. This tells me the month. This is the monthly, but let's look at the weekly. The weekly tells me that it still wants. Look, if you want to do the fundamental analysis, the idea. Look, before I go into the yield, okay, here's what we need to talk about. Okay, this is the debt. This is the U.S. gross debt as a percentage of GDP. Okay, when Mr. As Superman, anti-inflation Volcker was flexing his muscles here, all right, when he did the Saturday Night Massacre and he said, look, I'm going to target money supply. I'm not going to target interest rates because interest rates are double digit. Debt to GDP was around 30%, okay, 30%. And now, right now, it is 4 times that, okay? It's 4 times that. So they cannot raise rates that much. They cannot drive the interest rate on the credit card so much. Yields should not push that much higher. The only way for them to push higher, as you very well know, is if real yields have to come down. That means that inflation has to be pushed higher, right? That means inflation has to be allowed higher. How do you say that? You convince the world that it's a transitional, okay? What you do, like someone said, I don't remember where they said, when we had the technology bubble, we financed the technology bubble with the housing bubble. We threw everything at it by keeping rates low and encouraging everybody to buy. When the housing bubble burst, how did we take care of it? With the government through a sovereign debt bubble. Now we have a sovereign debt bubble, but of course, you can spend. Even the Germans are. It's not a bubble, but they are. So we went from a tech bubble to a housing bubble to a sovereign bubble. And now we are pretty much stuck in a sovereign bubble. And that's why you need this, right? You need real yields to remain low. So how do you do it? You got to keep inflation high. What do? You want to buy a climate bonds? That's why they wanted to get a Brainard. So you want to find something new to spend on? When COVID fixes itself, what are you going to spend on? So again, the red chart, Adam, button, is the real yield. Real yield, and the yellow is gold. So everybody's afraid that gold is going to do, so gold is going to do what it did in 2000 and in here, right?
That inverse relationship, right?
So and real yields escaped. Why they escaped? Because what makes real yield? It's the blue. It's the orange, which is nominal, right? Minus break-even inflation, right? Minus the blue. The blue collapsed. So the blue collapsed because the dollar was strong. We were importing a strong dollar from a weak yuan. We were importing disinflation, right? And yields went up because the tapering was about to start, and they actually peaked right when the taper starts. Okay, they peaked here, but it doesn't matter about the why. Just let's talk about what the market is. Again, this is 2013. So Adam, so here, so we are now here, and I'm saying famous words, Adam Button. This time it's different. This time is different, right?
I was hoping you'd say that.
Yeah, so the gold is not going to crash because yields are real yields are urgently needed to come down. And this guy is doing the work, because when this crashed, when the nominals soared and the blue collapsed, the blue is pushing higher and it needs to be allowed to go higher. And the orange is also pushing higher, bond yields, but it doesn't matter as long as the break even or inflation is pushing higher, as long as this guy doesn't do this. And this is going to hold. Yes or no?
Yeah, listen, gold's a chameleon, right? As we both know, the theme changes. You've studied markets over 50 years. And I think there will be a good trade on this real yields if they start to come up and they look, and gold gets flushed. And I think, and people start to, sentiment is already so bad in gold. And if it can get any worse, I think it's an amazing opportunity to buy it. Secondly, the seasonals in gold starting in December are unbelievable. December through February in gold is the probably the single strongest seasonal trade there is in any market that I trade. And I've traded that exact trade 10 years running, and it's 10 for 10. You know,
what are the specific months of this period?
Yeah. All right. I mean, I've got it. I might even be able to share my screen.
Dish it out. Dish it out.
Yeah. And
I'll stop sharing mine.
It'll just be a screenshot here, but I should be able to share. Oh, it says the host has disabled screen sharing.
Really?
But
wait.
If you know what, let me spin the camera around.
Go ahead.
I'll spin the camera around because it's such a simple chart. Well, I guess it isn't that simple.
Nice.
But if you see this right here, and I can even point to it.
Yeah.
We see it on that side of the trade. December.
Wait, Adam. This is may be too small. Why don't you share now? Try to share.
All right.
Can you see the sharing?
Yeah, got it.
No. I mean, do the sharing through Zoom.
I got you. Here it comes. There you go. Okay. And we can see me at the same time. All right. So if we look, so the top line is really, that's your 20-year average. Mm-hmm. December, even starting in November, but December, 1%. And it's been a good November, despite the last little bit. We're still up in November. 1% average in December. And then you look to January, almost 3% average over the last 20 years. How many years in a row of gains there? February, again, another unbelievable month. And there's a lot that goes into this. It's Lunar New Year. And that creates real demand for jewelry. And in India, it's the same thing.
Yeah. The Chinese Diwali.
Yeah. And you know, if you tally those years up and you look at that period, it's just been unbelievable year after year. If you bought a dip in November, and we have a bit of a dip right now, and just let it run. Now, will it work for another 10 years consecutively? I don't know, probably not. But I think in terms of how the fundamentals are lining up in that trade, it's a pretty good one, as tough as the gold trade has been.
Thanks for sharing that. Let me show you this, Adam.
Yeah, stop this one. There you go.
Thank you. Let me show you this chart because everybody's talking about ETFs and hedge fund and BTC and Bitcoin. So let's do this. And this chart is, you see this, Adam, the red one is the flows, into 7 or 8 ETFs of gold. Cool. Including BlackRock and everything. It's a Bloomberg chart. And you can see finally, so the lower one is obviously daily gold. And this is pushing higher. It doesn't mean much, but it is pushing higher, right? The other thing, Adam, which I really showed, which is the CFTC, okay, which is everybody knows about this, is this, and the specs. Now, do you know how I used to do the CFTC things?
All the time, yeah.
So
what is the one? That's gold versus silver. Gold. Okay.
Yeah, no, I'll do. So when I was in New York, do you know what I used to do? Every Friday, I used to. So it was at 3:15 p.m. I used to get the numbers from the CFTC, copy and paste them from the CSV file into Excel, delimit them, put them into my Excel chart, and I will have the net longs and the net shorts. That was a long time ago, and I was doing that. The same thing I used to do with the TIX data. The TIX data used to come, I believe, on a Wednesday, and used to come in at 9 a.m. New York time. And I was the first one to get those out, the TIX data, whether it's treasuries, who's Luxembourg, who's corporates, who's this. And I used to get them out. And Ron and Sana used to talk about them. And sometimes, do you remember a lady called Maria Bartiromo when she used to talk about the markets and only the markets in CNBC? And
those were better times.
And they used to email me and talk to me and said, yeah, how do you get this data? And blah, blah, blah. I said, but I was the only one who actually put it in Excel and change it. But now everybody can press a button and get it out. Now, go back to the CFTC net longs. I'm showing how old I am here. Oh my God. So the CFTC net longs, Adam, why do I want to show this? So up is the CFTC net longs for COMEX gold, and down is the silver net longs, right? And again, for those people who want to know, this comes out every Friday, usually around 3:15. I think it's still at 3:15 New York time. And for the Tuesday, for the 1 week period that ended that Tuesday, which is the Tuesday before the Friday. And as you can see, Adam, is that the real yield, where's the real yield chart? Yeah, so the real yield here, Adam, all right? No. So that's when all hell broke loose in April 2013, right? The real yield soared, gold collapsed, but here, so let's go to 2013. So what happened, the signal from sentiment from the speculators positioning, you see, it was still on a lower high, and the lowest high was October 2012. And these guys, they started to sell, the speculators started to sell, and this went from 200,000 net long into 134, and then Black April 2013. I remember that very well. Black April. I went to Saudi. I was going to Saudi that week. I remember, and things collapsed here. So what I'm trying to say, and again, viewers, no, this doesn't always happen. These guys do not necessarily always lead the market. But what is happening is that in contrast to these lower highs, which are respecting the channel, net longs, speculators, not hedgers, not commercials, this guy did this. All right.
Got some life, a little bit of life.
You see that? And now going back to gold, a lot of people are panicking. So gold is showing this, and I think there's a confluence of 100, 255. But I do think that once they start adding the suspense, are we going to speed up? Just like before, are we going to taper? Are we going to not? Are we going to taper? Are we going to? Wait, the 10-year yield is starting. What's happening here? Look, wait, what's going on?
Yeah, maybe they have
look at that. Gold is moving. Gold went up to 1792 because the 10-year yield just started to trade now.
Open
and
down.
It is down 4 basis points. Okay.
That's got to be a thin market, though.
It is a thin market, but that's why gold is doing this. And where is the 10-year? Okay. See, this is a beautiful thing about. I think people are going to say, guys, can you do this every week?
Keep going. Keep your two more. There you go. US generic. Next one.
Bravo. I was just testing you whether you're following.
It's easier when you're just watching.
So, oh wow, talking about. Oh man, is that a gap or a gap? Yeah. So, where were you when the Thanksgiving gap down happened? Well, I was listening to Adam and. Okay, so
you wonder if that's COVID. I mean, there is that fear, that new variant in South America. But I don't know. That's too thin. I'm not.
It is too thin.
Anything from that.
I did say I did tell my WhatsApp group to go long 1788, no 1788, and to target 1792 or what did I say? 97 or 90. I don't remember, but it was just below 1800. So this is good. But now I don't want to. So. I am so good sometimes that I can interrupt my own train of thought. but again, just about the yuan. So you've got the dollar index. So this is the dollar index, and this is the US CNH, okay? Offshore. Right, Adam?
Gotcha.
The XY, purple, correlated with CNH. One of the other things, so we've got the CFTC net longs are doing well, okay? We've got the real yields are coming down. And the other things that when you have a strong CNH, the biggest buyers of commodities, the guys who have organized a CNH denominated oil market, that's why the inverse relation between oil and dollar is broken. And also because they have their own gold market. This is one of the reasons, Adam, that I think is helping to solve the mystery. Why is gold pushing higher? Because in spite of the DXY pushing higher, because this guy, the dollar is collapsing in here against the CNH, right?
And that's such a puzzle, you know, given everything we've heard from Evergrande, and I mean, China being what it is, you're never going to get an answer to that. And it is, if you are a commodity importer in China, I mean, whether it's now, I don't think it's going to run away, but maybe after the Olympics, if they decide to turn on the growth taps, maybe this time next year, it takes till then until Xi, you know, he wants to really solidify himself, or maybe even the run up to that. So I don't know when it is, but China is the great consumer of commodities in the world, and that does extend to gold, everything.
Yeah. Now, a dollar bull will tell you, look, this is a no-brainer because the DXY technically, weekly, it faces very little resistance except probably 97, while dollar CNH, it is near a support, right?
Yeah, it's wild. I mean,
so if this guy stabilizes and start push higher, i.e. USD CNH pushes higher, this would be the perfect storm, and this may get you the storm that will get you a slightly weaker gold, especially when these guys, they're going to shift from, are we going to taper, are we going to not, to, are we going to speed it up, are we not going to speed it up? But before we get carried away with the bearishness, in any bearishness in gold, Adam, I think whether we're going to, before I point out what the yields happen, I think we're going to go out towards 1800 for a bit, and then we're going to come down. And then when the nonsense and all the stuff are going to speed up taper, I think that's going to lead to a quick drop here towards 1770, maybe test 1760, and then we're going to push higher. Because here's what gold, and here is what metals, and here is where the magic metal, which I advise everybody to buy an ETF on, which is what? What do you think I'm talking about? My WhatsApp group know that.
Suspect you're talking about silver.
What is the magic metal that is, it has so many applications, health, medical, industrial, technology? Which one? It led, okay, here is, I'm going to give it away. It pushed people to start stealing stuff under the cars.
Yeah. Oh, platinum.
Yeah. So I'm going to show you so I think you really have to buy an ETF with a platinum. There is an iShares, there's an Aberdeen one. Look which one has, I think you really should buy that. The chart is great. We're going to look into that. This is like, of course, copper, they say 40% of EVs are copper, blah, blah, blah. It's great. But I think really platinum is quite solid. Now, why am I talking about that? Because gold is showing you this. This is again, and silver is showing you this on steroids. So we could be, if we break 1760, I think we may see, it's going to scare everyone. It could touch 1730 and go back up. Like, it couldn't do this candle. Okay. It could produce this candle. We could go all the way here, 1697 and go back up. And then, but it's the close. And so we could do that. And this could be still valid if the close is here. But look at this chart. So before I go to platinum chart, I'm going to go into the silver, Adam. And the silver chart, this is the narrative of the silver chart. So I'm not going to talk about the GameStop craze and the Reddit guys, but silver did its work to hold the support. It worked hard, and now it pushed up, and now it's worried about how it's going to rally. So gold and silver, they show more or less the same thing. You got some stabilization on the side, on the left and the right. But look at XPT.
Yeah.
Look at XPT, platinum. So this is the weekly, but you see this? Again, maybe inverted head and shoulder, left shoulder, the head, the right shoulder, respectively. The daily is going to make more sense. So if you're going to fundamentalize the technicals, is this, if we do break below 960, 950, then yes, then it will be a case of this coming down, and the right shoulder would give up, and we could come back further down. But this is really showing something, right?
I mean, it seems like a pretty good risk reward at this point.
Exactly.
With the stop below 900 there, right around.
Right. But the DXY is a big thing. Yeah, so dollar yen so yields are coming down now. Dollar yen is pushing down. Maybe it's a great buying opportunity. If we go back to the 10-year, Adam, so what do we say? This chart, we had a nice call before the NFP. It showed us a head and shoulder. It broke. It told us that its yields are going to go down after the NFP, no matter whether it was going to be weak or not. We come back down. What is this chart telling us? This is telling us that I think we could quickly go towards 177, 178, and then come back down. Preliminary, so what do you think?
I mean, it's been betting against bonds has been just the worst trade in history, right? And that means lower yields. What could happen? I mean, COVID picks up, the inflation story, turns out it is transitory. I mean, we all are fighting the Fed in betting inflation. And that's, again, one of the worst trades ever. So, you know, maybe it does bear out, but you're still at 1.5, right? 1.5. I mean, it's not a lot of yield for anybody buying yield. So, you know, I'm optimistic about next year. And I think, you know, household balance sheets are in great shape. People want to end COVID. I think COVID does end. I mean, the technology, the vaccines, everything is getting better. Commodities, I think, have nowhere to go up. You talk about metals, and I'm just wildly bullish on all the industrial metals for the next decade, and on energy. And so, you know, I think there's all these worries in the world, but this is just a lot, and taper, no taper, right? And I don't want people to get too caught up in that debate, and you know, if they speed it up in 2 weeks or they don't. You know, I think it's too early to speed it up, but I think they will eventually speed it up. The wind seems to be blowing in that direction.
Can they afford it? Can they afford to do it? Look, I'm not going to go on and on about how many people are still on benefits, how many people have had their broken jobs, how many people, like in the UK, there's still people talking about not being able to get compensation for the landlords. And but Bitcoin is paying attention and it's pushing higher. And I still going to think we're going to go to probably 70 or 75 before the end of the year.
I think it's hard to bet against 100,000. I mean, it's there. I mean, there's all this fragmentation too. And you've done such a great work on Solana, and Ethereum was struggling and then kind of showed a bit of strength. But I think
95,000 before the end of the year, Bitcoin. What do you say?
Well, there's so much fragmentation, but Bitcoin always seems to be above. We all know the flaws of Bitcoin as a use case, but it is still the flag bearer. And I thought it would lose that. And I still think there's an argument that it will on wasted energy. I mean, I don't like to see wasted energy, but that's not the way the wind is blowing right now. And, you know, China banned Bitcoin mining. I don't think they'll be the last, but
they're talking about India doing something and banning, but leaving only the big ones.
I mean, we're in an energy crisis, but I mean, Bitcoin knows that, and the money. I mean, money just chases money. So
I say 6,000. I say 6,200 Ethereum before the end of the year. 6,200 is my main target, and then maybe we're going to go to 8 or 7 or whatever. But I think 6,200. I think probably 88, 89,000 Bitcoin before the end of the year. Looking at Solana, thank God I start to lighten down from Cardano before eToro came out with their special. I don't know how long that's going to last. I think XRP, I think Ripple is going to do well. I think a lot of people need to be careful with the metaverse right now. They need to pull down a little bit before going back in. ENG, I like Mana and Sand. You said industrial metals. Yeah, let me just show the industrial metal chart.
We're going to get kicked off of Zoom here if we're not careful.
Oh, we good? Okay.
We got time?
Yeah. So basically, so this is the industrial metal side. So let's just go run quickly here about some charts. So I think the euro dollar, we talked about the euro dollar. I think we could go very quickly towards 110, 111, and then we stabilize, and then we're going to stabilize a little bit before push higher. If we have a close below 108, that would be very.
And to cut you off, I mean, I'll buy that dip, I think, if it does get down there, because we've seen a number of times, just like the Kiwi recently, when the COVID fears peak is the time to buy a currency. And I think we're very close to that in Europe.
If you want to buy the euro but don't want to get involved in the dollar, this is a great chart that I've been talking to the WhatsApp group for a long time. This is euro sterling. Look at this. If you believe in symmetry, if you have an engineering or an artistic background or whatever, this is a monthly chart. You can see here the fractals here and here. Okay, euro sterling. You see the way it's reflected here, the midsection here. Same thing as here, coinciding with the 100-month moving average. The RSI, it broke the trend line, but it is still horizontally respecting that. Kind of similar what it did here. Again, this is week. This is monthly. People hate the monthly. Euro sterling, not bad. So weekly. Again, people are probably going to go and ask, are we going to sink what's going to happen with, they started to negotiate and so on and so forth. This is a very dirty, a dirty mocha, what do you call it? A dirty latte or dirty, so what do you call it? What's the other drink? Yeah. So you got left on shoulder here, it broke. Now you're testing this. Look at the weekly. I don't know if this is valid. Euro sterling risk reward is not bad. So dollar yen, we say what? 115.80, 116?
Dollar yen, I mean, it could go along. And we talked about, you talk about bonds. It's the biggest bubble in history. And the spending, though, isn't going to stop. I mean, it should stop, but I don't think people vote for fiscal discipline anymore. No, and, that is a lot. It creates this inflation. In Q4, we're going to have 4% US GDP on top of 7% inflation. So what's the real growth, or what's the nominal growth there? 15% versus, I mean, that's powerful stuff for rates and the dollar and dollar yen. So I like that trade.
I'll explain this chart in a bit, but I think before people start to talk about indices, I think the way I see it is that everybody said that they're going to crash, they're going to crash, they're going to fall. I don't think it's that. It's they will crash, but they will fall for an increasingly short period of times. And so the depth of the declines, this is the theme, the depths of the decline are bigger and the duration is shorter. The United States government cannot afford to have lower receipts of capital gains. They need to basically get tax receipts from anywhere. And if the market drops even 20% or 30% and it stays that way for 3 or 4 months, it's going to be a problematic. That's one of the reasons that they need to have. It's not just the wealth effect. It's not just that. It is the recipient receiving tax effect from a government. Look at it. This is the current account surplus. I know we haven't spoken about this in a long time. The current account deficit of the United States, red, and this is the dollar index. Okay.
It's Charles. It's a nice one.
Is this the current? It is the current account. Yeah. Is this the current? Yeah, it is. It is. It is. So, oh boy, where is it? Did I miss it? Oh, where is it? Mama. Yeah, so here, look. So we're going to 80.84. So obviously the current account deteriorates and the dollar falls, right? Obviously, we don't know what the budget deficit is doing here, but we know what it's doing. We just spoke about it. Here it's deteriorating. Here it's pushing higher. It's pushing higher because the dollar was the only game in town in 97, 98. The technology bubble, all the money was going into the dollar, all right? Technology, 98, 99. The budget deficit was getting worse, but the current account was falling, but from a high level, from a low level. The correlation is fairly positive, right, Adam, right?
Yeah.
Current account deficit is shrinking, going back to zero.
Listen, you don't need to look any further than Turkey right now to see these impacts.
But here we're seeing the deficit deteriorating, the dollar pushing higher. Again, it's just it's a lot of it. It's a euro story, but don't take it away from the dollar. It's doing very well. So so this is very similar to ones we had. The ones we had in a way here.
And I don't see any way that turns around that current account deficit anytime soon. I mean that.
But they tell you it doesn't matter as long as they're financed, as long as we are able to finance it by sucking in, because I mean the US is not selling as much as US treasuries as they used to. Putin sold everything. The Japanese the Chinese are buying less. The chart is well known. It's only the Japanese with that other special relationships, but it's not enough for the foreigners. Foreigners are not buying enough bonds. And that's why the US banks are engaged into the business of not lending, but buying bonds, buying US treasuries. But the way we're financing the current account deficit is by having the technology miracle, the Teslas and everybody. All right. And so this is helping. And the Saudis are buying, Rivian. I mean, not Rivian, Lucid. I'm buying Lucid. They're buying Plug Power. They're buying. The whole world. But is this going to continue? So let's have just the closing thoughts. Dollar CAD, what do you say?
Yeah, we didn't even touch on that. I mean, I think I talked about dollar yen is a great trade. CAD yen is a greater trade. All the commodity currencies, as you can imagine, I'm very bullish on that trade. And I think we're still in very early innings in the growth cycle. CAD is a great spot to be. Aussie, Kiwi, emerging market commodity exporters against commodity importers. So there's a lot of ways to look through all that trade. I mean, it looked like we had a nice little head and shoulders here developing for a fallback to 120. I think that eventually sorts itself out. So
an inverted or irregular?
Well, just a regular. What you see before this latest blip up, if you see sort of from September there, you see those 3 spike highs.
Yeah.
Just this year, and I thought it was going down to 120. Obviously, that's been a little bit busted up here, but I still think that's the direction lower. And I honestly, we're going to see.
How about Canadian yen again? If you like the dollar, if you like the dollar versus the yen, and you like the Canadian, why not liking the Canadian versus the yen?
And that's been so technical. If you look at the start of this year, what an unbelievable, and that was a trade I was pounding the table on at the start of this year, because it was just an unbelievable technical break of this. It was like a wedge sort of at the end of last year, right around the US election. You could see it just consolidated, and then it just busted up. And then it comes back down in August as COVID comes back, retests the 2019 highs. And then it takes another leg, and it only took about 3 weeks to pop again. Now it looks like we're consolidating, maybe testing the latest breakout or trying to get there, but not a lot standing in the way of 105.
Yeah, it looks very, very positive here. It looks good. It looks good.
Looks like a nice little crossover there too, about to happen on whatever moving averages those are.
Yeah, the crossover. Yeah, it's the 100 over the 200. Gold to silver, again, if this pushes higher, it's bad for gold dollar and silver dollar if this pushes higher, so got to be careful. Gold bugs index, I am watching that a lot, gold bugs index, but again, you guys go to the YouTube channel, you see the previous videos, each video has a chapter. So dollar index, this was our own 2 cents. We said we have to watch USDCNH. Any other pairs you like? The commodities, the Aussie, the Kiwi?
I think, just the main message. I think at the start of the year, these trades, I think there's some dollar strength, dollar weakness probably coming, some yen strength maybe, and then it all reverses starting next year. And, ignore the taper, ignore all this noise. Things are getting better, and that's really the trade.
I think they're getting better, right? Keep real yields relatively low. Let the market drop every probably 3-4 months for like 5-6%.
It is scary. I think that's a great trade though, because that aggressiveness of the falls, like you pointed out, is for real. The options trading, the leverage, 10-20% declines in equity indexes. That feeds on itself in this kind of market where the leverage is unbelievable, and it becomes very sharp, very quick, and a very big opportunity once it stops. I mean, you don't want to be trying to catch that falling knife, but it's going to be moments of panic that are going to be unbelievable opportunities.
So futures are falling. So look, if sterling is looking ugly, there is no support, okay? There is no support in sterling. There's no support. It's a figure of speech. And euro dollar, it seems you can say also the same thing. There's no support, but I think there's a small support. So we're just going to go here. So this is another reason why I like euro sterling. So there is some sort of support here, just around this level. So you've got this congestion here and congestion here. We talked about the fundamentals. We're not going to regurgitate them. But euro is finding some support here, as you can say. Sterling is finding nothing, and that is good for my euro sterling trade. And this tells you that this baby is going to want to try, at least it has to try around 84.70. I interrupted you. What other thing that are?
I mean, I think that's
EVs.
Yeah.
Are you buying anything?
I was looking at minivans today, Ashraf. As you know, I got more kids coming, so I need a minivan.
Yes. Well, Adam, he has few kids, and they are expecting. I am proud to announce. Good luck. How are you going to do that? And he's got more than I do. Do you know this Rivian, guys? Do you know that when a friend of mine told me that they're going to do the IPO around 70, and then I said, wait, I'll wait how it goes. And when it went to 100, I thought it was too expensive. Look, it went to 180, now it's 114. Can you believe that? Rivian. But I do like Lucid. I own it.
I mean, that leadership he seems like an interesting guy. He is the engineer from Tesla, and he seems pretty determined.
Tesla, blah, 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 blah. The guys who are buying it, they can buy stocks in advance. Here is a very technical play. Do you see this? Do you see this gap down? We have filled the gap, and the top of the gap is now the support. This is a big deal. Okay. Right. You see this gap?
Yeah, no, that gap, and even buying it on the way up, obviously it was a little bit sloppy once it started to fill it. But
down. Call this a flag, call this a flag or a pennant, whatever you call it. This baby should be pushing higher. Weekly RSI should look much better than the daily, but yeah, this is. Yeah, wow.
It's a nice looking car. It's a nice looking car too.
It's an amazing. I mean, 130, 140,000. I don't know if it's not for everyone, but it really shows you how many millionaires there are in this country. So, we cannot end this note. Was it a note? It was a speech, without showing this beautiful chart. Okay, this is Ethereum, and the fractal here. You see this guy here? Look how similar this is. So you've got a top scale. So you got a top. Yeah, exactly. The scale is proportionately much higher, but if you compare this triangle with this one, so you come down, you go up, you come down, you've got a lower high. You got a higher low. The low coincides with this neckline. The low coincides with this neckline.
And then you get a little retest. A little bit of a retest after it breaks there too.
You broke up. You come down, you retest, and then you take off. You come down, you retest above the high, you retest above the high. You go up, down, up, down, up, down, up, down, and here we are. So does this telling you that I gave this guy a visa to go now to do this? So we are here now. So we are here. And I told, actually, 9 days ago, I told the WhatsApp that in 9 days, around Thanksgiving, we're going to take off, and hopefully it will happen. So this is what Ethereum is showing. This is only weekly. Don't ask me why I did the 6200. You have to be one of the privileged members of the WhatsApp, but I think hopefully 62 is going to happen. Let's do XBT. So a lot of people thought we were going to go to 20,000, but this was a classic head and shoulder. This 30,000 was from the distance to the head, to the head to the neckline, overlay it, it gives you this. It's
such a technical chart. It's an unbelievably technical chart.
And I know that it's very easy for people to speak after the fact, but I was saying this to people who were saying 28 to 30,000 a lot. There was a lot of very smart minds out there who were calling for a head and shoulder, but they were saying that the head and shoulder target were actually going to be around 20, but no. But let's see now, is this going to happen? Adam, thank you. You've been very generous with your time.
It's always
okay. And continue to do the good to the world of currencies that you're doing. You and Forex Live, you're doing a great job. And well,
likewise, Ashraf, you're a mentor for me. So it's a pleasure to come on here anytime. We really do need to do this more often. It was fun, and I hope people it resonates, and I hope at least
we need to. I mean, we need to. We enjoy what we do. We are lucky to be enjoying what we do. Forex Live is here. Okay. Here's Adam.
I wonder what he's doing
when he put this thing on.
I need to write something about bonds here. It is. Yeah. No, Aussie retail sales just out here too. So
Aussie retail sales 4.9. Okay, I'm going to show it to the public right now. Here it is. Okay. And
that's a pretty good number.
Yeah, what's Aussie doing? 71.69. Actually, currencies, yeah. But Aussie Kiwi has a nice chart, by the way. Aussie Kiwi, yeah. Before we go, okay, I'll let you write that. I'll let you write that, and I will do the Aussie Kiwi chart. It's, yeah, Aussie Kiwi chart is looking good. There is a trend line resistance here. Should be interesting to look at. Okay, so this was the number. Yeah, here's a number. And this is the divergence that I was telling people about. Basically, the CNH, dollar CNH has been falling and dollar index has been going up. Okay, I'll let you go. So basically, you guys know where to find us, ashraflaidi.com, Adam, bottom, FX bottom, and here we are. Thank you very much, Adam. I'll let you go, and happy Friday and happy weekend. Have a good one. Thank you, everyone.
Thanks so much.